April 2022. April 2022. Question number 3, cow. April 2022. Question number 3, cow. Tell me whether all of us are there already. April. Yes, Mercy. We can have 2. Actually, you shall be doing that kind of a question. Yes, you can have 2. You can have a bonus and a right. You issue a bonus at first so that you have many shares, and then you issue right later. Yes. Thank you very much. So they have gotten the question already. There is nobody who is struggling. Nobody who is struggling. So we are doing this question, April 2022, question number 3C. So required 1, they want me to give them basic earnings per share for the year ended 30th September 2021. Number 2, restated earnings per share for the year ended 30th September 2020. Number 3, diluted earnings per share for the year ended 30th September 2021. So we are told there, R Limited, a publicly traded company, had 9 million ordinary shares of shillings 1 par value and 1 million 7% redeemable preference shares of shillings 10 par value each on 1st October 2020. As at that date, R Limited also had in issue 2.5 million stock options. These options are exercisable at shillings 1.5 per share. The average fair value per ordinary share during the year ended 30th September 2021 was 2. R Limited's profit for the year to 30th September 2021 from continuing operations was 14,575, and for the previous year, it was 15,100. The following transactions took place during the year ended 30th September 2021. On 1st January 2021, the company issued 1.8 million ordinary shares in a 1-for-5 rights issue at a price of 2, when the market price per share on a CAM rights basis was 5. On 1st April 2021, R Limited also had in issue 1 million ordinary shares at their full market value. Note 3. On 1st July 2021, the company issued a 5 million convertible bond with an effective interest rate of 12%. The bond is convertible into ordinary shares, at the holder's option on the basis of 60 shares per shillings 100 bond. None of the bond was converted during the year ended 30th September 2021. The income tax rate is 30%. So required, number 1, the basic earnings per share for the year ending 30th September 2021. Number 2, the restated earnings per share for the year ending 30th September 2020. Number 3, diluted earnings per share for the year ending 30th September 2021. So the question we are doing is April 2022. It is April 2022. April 2022, question number 3C. Question number 3C. So the first thing you will do, ladies and gentlemen, this is a question that you will get all the marks without knowing what you are doing. All the marks, trust you me, all the marks. All the marks. You shall be able to get all the marks here without knowing what you are doing at all. The first thing you do, you must get your dates right. You must get your dates right for you to capture transactions within each year correctly. Within each year correctly. So if I read up there, R Limited, a publicly listed company, had 9 million ordinary shares of 1 value and 1 million 7% preference shares of shillings 10 per value each on 1st October 2020. And then if you look at the question, they are talking of basic earnings per share for the year ending 30th September 2021. 30th September. So the year ending 30th September 2021. September 2021. So then if that is the case, could you kindly tell me the starting period for this year? The starting date for the year, the starting date for the year. The starting date for the year is 1/10/2020. That one, I think everybody would have gotten this correctly. So then the first thing that I will do, if I'm the one doing this, I'll check and see whether there was any bonus, whether there was any bonus issue or rights issue in the year. Bonus issue, Gotire. Gotire is a German word for there wasn't anything like that. But we have a rights issue, isn't it? We have a rights issue. We have a rights issue. We have a rights issue in which note? Check note number. We have a rights issue on 1st January 2021. 1st January 2021, note number 1. 1st January 2021 falls here. January 2021 falls here. And that is why how I wish these examiners, any question to do with EPS, they should be having their dates ending in December. A good examiner gives you ending date of 31st December. That's a good day. When examiners give you something like this, very many of us tend to struggle a lot. But you see, you can always, you see, like when they talk of first, when they talk of 1st January 2021, you'll be able to see, you see after October, November, December, we go to January 2021. So January is in between here, 2021. So in this case here, there was a rights issue. This is a free mark, a rights issue in 2021, year ending 2021. Thank you very much. So then go ahead and tell me what the right was about. So the rights here was about, 145. So it is 145. 145. Once you tell me this, I'll come and do this table where I have shares. So what I'm calculating here basically is the theoretical X rights price. The theoretical X rights price. So I'll have here shares vis-a-vis the values. I will have shares vis-a-vis the values. Thank you, Mary Ann. You are the best. Shares vis-a-vis values. So in this case here, the shares, we have this one. And then we have what here? 5. So you see, 1 is the right. And I normally get some students confusing. You know, you get somebody, honestly, at this level, interpreting this thing that at 1 old, for 5 shares, for 5 new. Is it possible for you to get very, very many new shares? Is it possible for you to get very many new shares? It's not possible. There will be too much dilution. It is 5 old that you have. You are given only 1 kamwe new. So this is new, 1 new, 1 new. So new versus old. You can even write here. This is new versus old or current. So then again, they have given you 2 prizes. It doesn't matter how these examiners would want to confuse you. When they give you 2 prizes, the lower price is for the new. The lower price is for the new. The lower price is for the new. So is there somebody who is able to see the lower price here? Is there somebody who is able to see the lower price here? The lower price, the lower price, the lower price, the lower price. So in this case here, we are told, ladies and gentlemen, issue at a price of 2, when the market price per share was what here, somebody? 5. So the lower price, so this will be 1 times 2. And this will be 5 times 5 times the old price. Old price, which was what here, somebody? 5. So then this will be 2, and this will be 20 what? This will be 25, right? 25. And then, ladies and gentlemen, come and give us the total value of the shares held in this basket. So the total value of the shares held in this basket will be 27. But for how many shares? For how many shares? For how many shares? For how many shares? 6 shares. 6 shares now. 6 shares. So then out of this, I will be able to get the TERP. I will be able to get the TERP. So the TERP, the theoretical X rights price, I will come and take here 27. This 27 here, I divide by, because it's an average, divided by 6. So then this will give us what figure? 27 divided by 6, 27 divided by 6, 27 divided by 6. So Masi Mumbe gives me 4.5, 4.5. After that, then I'll come and give them the fraction. I'll come and give them the fraction, what we call the rights fraction. What we call the rights fraction. Is there anybody who remembers the rights fraction? It's market price. No. It's market price. You can't work with power values. It's market price, all over what here, somebody? Market price, all over market price, all over the term. Market price, all over the term. So the market price, ladies and gentlemen, the market price that we picked, we cannot work with the share capital at par, we only take it to the balance sheet only in all mathematics of financial reporting and the financial management. So the market value of the old shares, you guys gave me a figure of 5. So this is 5 over the TERP. TERP that you've obtained here as 4 point what here? As 4.5. And remember, Kamutu here, if you try to use like the price here 1, then it will complicate everything about theoretical exercise price, because there is no way new shares can be cheaper, can be expensive. I mean, can be expensive than old shares. There is no way, no way, no way. All right. So this one, I don't go ahead to get 1.2. I'll just leave it like this because of this term, fraction like that. I said Mary Ann was the best because Mary Ann confused how to get the rights fraction versus the bonus fraction. And Mary Ann, when Mary Ann saw this 1 to 5, she went ahead and told us, you know what is the fraction? 6 over what? Which is very brilliant. But remember, it's brilliant for which transaction? Bonus. I hope Mary Ann will never forget. For bonus. For bonus. Thank you. Thank you. So ukiangalia marking scheme, utauma marks kama mbili hapa. Kimchezo tu. Because so many students don't even attempt a question of what here EPS. We at least ushajua hiyo. Now, after this, ladies and gentlemen, the next thing I will do will be the one-os table now. After this, I will go to the one-os table. After this, now I'm going straight away to the one-os table. So I write in capital letters, one-os table. So this one-os table, I will start with the date. After the date we have in this case, ladies and gentlemen, cumulative shares. Cumulative shares. After cumulative shares, I have here bonus or rights. The students were asking whether they can have both. Yes. So we write it bonus or rights what here? Fraction or rights fraction. No, I should not never start with that. Although there is no harm, but I don't like starting with this. We start with the time fraction. We start with the time fraction. We start with the time fraction. We start with the times fraction. And then we have now the bonus fraction. Now we have the bonus fraction. And then at the end of the day, we have what we call one-os. We have what we call one-os. We have what we call one-os. So we start with the first date, which has to be this one, always. So then the first date here is 1/10/2020. We talk of balance brought down from 2019, rather from the previous year. So is there somebody who is able to give us? Remember, it is ordinary shares. Don't bring preference shares here. Don't bring preference shares here. Is there anybody who is able to see how many ordinary shares we had? They are telling me that we had how many shares? 9 million, isn't it? So can we cut 3 zeros or we work? Let's just work the whole with all the zeros. So we have 9 million. Come and book this year. And the cumulative, you book this year. And at the cumulative, you book that there. You book that there. And then now you go to the next date. The next date is when? When do we have the next date? The next date, ladies and gentlemen, that I'm able to see here, the next date that I'm able to see there is which date, ladies and gentlemen? The next date that I'm able to see there is which date? We have a rights issue. We have a rights issue on 1st April. Is it 1st April or 1st January? We have the 1st January 2021. 1st January 2021, the company issued 1.8 million ordinary shares in, yes, rights issue. Rights issue. It is 1 for what here, somebody? 1 for 5. It is 1 for 5. So it will be 1 for 5 times what here times the shares outstanding. The shares outstanding are 9 million. So 1 to 5 of 9 million. How many shares do we have there? Somebody who is following. According to Mary Ann, it is 1,800. Here, 1,800 here. 1,800,000 like that. There. We do all the workings, including getting figures here, and then we bring cumulatives here. So 9 million plus 1,800, that gives us what here, somebody? 9 million plus 1,800. That gives us what, somebody there? This gives us 10,800. We target another date that is given to me. Another date that is given to me. Another date that is given to me there is 1st April. Is 1st April 2021, which falls in between here. 1st April 2021. 1st April 2021. 1st April 2021. 1st April 2021. we had a a new issue of 1 million shares. New issue of 1 million shares. So these 1 million shares, accumulate them here. If you accumulate them here, you will get 11,800,000. 11,800,000. 11,800,000. 1st of April, thanks, Sarah. 11,800,000. 11,800,000. We shall get 11,800,000. Now from there, we get into that stage because there is no any other transaction. Remember, the next transaction is on 1st July 2021, which is well within our time period. But this is regarding a convertible bond, which was not converted at all in the year. This convertible bond can only assist us in calculations of what is the diluted. So that is it. So let's get to this stage that ladies are not very good at, the stage of counting number of months from one transaction to the next transaction. So like now, J. Kamau tells me 3/12. From this transaction to this, I don't like that method where we count from the beginning to the end. We shall overcome. So, Manoti, we shall overcome. Don't worry. Don't worry. So it's 3 months. Let's count them loudly. So we have October, November, December. Don't count January because this was at the beginning of January. So you guys are right. I have good ladies here who cannot confuse dates. So we are talking of 3/12. How about this date to this date? How many months do we have there? Count. We have January, February, April. No. January, February, March. Don't count April because April here you can see it's at the beginning. So you're talking of somebody saying 2. How did you count them? Massive Mumbe. How did you count them? How did you count them? How did you count them? Let's count again. And remember in an exam, so long as you're not touching anybody, you lift your hand like this. With those great nails of yours, very good nails of yours, you count. Don't think that, or rather worry about what people think about you. Just raise like this, and then you whisper. You are counting loudly. So it is January, it is February, it is March, April is at the beginning. It's 3. So when you talk to yourself like that, people will think that this student is a genius. Then after class, of course, people will ask you, where were you studying? That is the best way of marketing Mwalimu. The best way of marketing Mwalimu. So from there, ladies and gentlemen, we have accounted for 6 months. This being the last date. This being the last date. This being the last date. 6 over what year, somebody? 6/12. 6 months over 12. Now, do we have any rights fraction, rights or bonus fraction? Yes. And remember, these rights happened here. The rights happened here. So is there somebody who can remind us what that fraction was? That rights fraction, we got it. Is there anybody who is able to remind us what that rights fraction was? Oh yeah, I'm alone. I'm alone. I'm alone. 5.4.5. So where will I write this? Let me write here number 1, number 2, number 3. That 5/4.5, where am I going to write it? Is it number 1, number 2, number 3? Or am I going to write them in number 1 alone or 1 and 2? But it cannot be 1 and 2. It is the concept of prior, the date when the rights happened. Prior, what we call retrospectively. You move backwards. You move backwards, like Satanism. You know, Satanism, they say it's backward ever, forward never. So please, this is when the rights happened. So here, you cannot put that thing here. You always talk of prior. You affect prior shares. So then it will be 5/4.5, and there is nothing that will be put there. So then come here and give me the weighted average number of shares. So weighted average number of shares, you take 9 times this, you give me a beautiful figure right here. Thanks, Fozia. Give me a beautiful figure right here. According to Mary Ann, this lady we were told is not married, is 2,500. 2.5 million. Are we not taking the reciprocal? Georgina, good question. We only take the reciprocal whenever we are computing what we call the restated for number 2. You see number 2 of the question, restated earnings. That's when we shall reciprocate. That's when we shall reciprocate. So then the second one they are saying is 10 times this. 10 times this will give me 2.7 million. Thank you very much. 2.7 million. Thank you very much. And then now the third one will be this times this, which will give me what figure? This times this will give me what figure? 5,900. This times that will give us what figure? These guys are not talking to me. The last one will give us 5,900. 5,900. So then could you kindly come and add for me? And then, of course, once you get this kind of a thing, you'll always come in capital letters. Capital letters. You write for this examiner to scare him. Total one-os. But after scaring him, at the end of this thing, you draw an emoji for him where you're smiling, like that. So if you add the 3, what do we have here as the total one-os? Total one-os. 11,100,000. 11,100,000, like that. 11,100,000. 11,100,000. I've not understood that question, Mary Ann. 11. Oh, you add here that you come from a humble background, so they can look at your paper nicely. That's a good one. So, ladies and gentlemen, I'm so sure in class, you may have done this question using a different approach, but the answers are what here? The same. The answers are 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 the same. So it is you to choose which method to work with, which method to work with. So from there, ladies and gentlemen, what do we do? Now we are left with only one thing. Now we are left with only one thing, to adjust the profit. Because, sorry, Miriam, already deleted. But somebody must have written these notes very well. Is it possible for somebody in this case to take a screenshot? To take a screenshot of this and then they send? Nimeteseka na formula na usijali. Nikiwa hapa, mambo itakuwa smart. Like now when I do the next question, everybody will be very comfortable with EPS. Now you'll tell me, Mwalimu, EPS, that one, let's go to something different. Let's go to something different. Miriam is really crying there. Somebody send to Miriam the notes on WhatsApp. Miriam, don't cry. Don't cry. I'm so sorry. I'm so sorry. Great. So then, ladies and gentlemen, we go straight away to, remember they want us to give them the basic EPS. So basic EPS, what do? We take profit attributable to ordinary shareholders. So profit attributable to ordinary shareholders, profit attributable to ordinary shareholders, all over profit attributable to ordinary shareholders, all over the one-os. So are you able to see the profit for this year? The profit which ended there. Is there anybody who is able to see that profit? Oh, yeah. Is there anybody who is able to see that profit? Oh, yeah. Oh, yeah. The profit for this year. 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 They gave us a profit somewhere. They just don't want to see this paragraph before the notes, where they are telling us our limited profit for the year to 30th September 2021 from continuing operations was 14,575. 14,575,000. But now remember, if you have preference dividends, yes. If you have preference shareholders, you must deduct preference shareholders to get the remnant for the equity holders. And yes, we have 7% redeemable. We have 7% there, 7% redeemable preference shares of shillings 10 per value. Of shillings 10 per value. So in this case here, the total preference share capital, total preference share capital in Kenya shillings, will be the number of shares we have there, preference shares we have there. They are 1 million, and each share is going for 10 bob. So that gives me 10 million. And therefore, I will levy the 7% dividend on this. So 7% times 10 million. All over the one-os. One-os, you gave me an ugly figure. This ugly figure that you gave me, ladies and gentlemen, this ugly figure that you guys gave me, the one-os, 11,100,000. 11,100,000. Thank you so much, Kendi. So then, is there somebody who is able to give me this basic EPS? Is there somebody who is able to give me this basic EPS? Anybody who is able to give us this basic EPS? They are not even talking to me. They are not talking to me. Mary is asking a very good question. When you are given preference shares, both of them, redeemable and irredeemable, Do we do adjustments by subtracting both dividends? Both dividends. Both dividends. Both dividends. Both dividends. When we are given redeemable and irredeemable preference shares, so do we subtract both dividends? Dividends from preference, both of them, both of them, both of them. Somebody is saying they are just irredeemable. Preference alone. It's preference. Remember, it is preference, but they have given you redeemable, 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 and irredeemable, and irredeemable, and irredeemable. So do we subtract both of them from here, like would have I said minus something different, or do I subtract redeemable only? Actually, the next question that I will be doing, will be touching on this. Let me leave this, preserve this for the next question, because this is very interesting. This is very interesting. This is very interesting. Now, I've seen, ladies and gentlemen, somebody mentioned something to do with tax. Do I come and subtract tax here? Really? Preference dividends don't get tax waivers. They don't go through the tax bracket. So don't bring any issue to do with what here? Tax. Don't bring any issue to do with tax. Rule number 4, I like what Fose is telling me. Rule number 3 and 4, I'll be doing that after this. Thank you so much. So then what is your basic? What is your basic EPS? What is your basic EPS? Hey, you good people. Somebody is giving me a figure of 1.25. Basic EPS is 1.25. Basic EPS is 1.25. So from there, ladies and gentlemen, please go ahead and give me, please go ahead and give us the restated number 2. Number 2, they want us to give them the restated EPS last year. Restated EPS last year. Restated EPS last year. Restated EPS. Or the profit given does not state it's after tax. Now, when you are given here profit for continuing operations, that must be profit after what year? Profit after tax. That must be profit after taxation. That must be profit after taxation. Now, please, let's go straight away and give them the restated EPS for last year. Restated EPS for last year. Restated EPS for last year. So restated EPS for last year. So for last year, some good examiners will give you EPS for last year directly. But this examiner, the criminal of an examiner, hakutupatia the EPS of last year, but I can get it. I can get this EPS for last year because I have the profit for last year. The profit for last year ilikuwa ni 100,000. Are you able to see that profit? Are you able to see the profit for last year? Are you able to see the profit for last year? These guys are not talking to me. Are they able to see the profit for last year? That is September 2020. Yes. So what do you think of those preference shares? Preference shares were existing last year. Preference shares were existing last year. So I must come and subtract the 7% of the 10 million like that. Divide this by the number of ordinary shares last year. Not the ones that you got this year. The number of ordinary shares last year zilikuwa ngapi? Number of ordinary balance brought down. Thank you very much, Mary Ann. The balance brought down in this current year. The balance brought down in this current year, ilikuwa 9 million. 9 million. 9 million. 9 million. Ilikuwa 9 million. Ilikuwa 9 million. Okay. So then could you kindly give me the final answer? Give me the final answer here. So this is the basic EPS for last year. So the final answer here, basic EPS for last year, what do they have? Is there somebody who has already gotten this figure? For last year, they're giving me a figure of 1 point what year? They're giving me a figure of 1.6. They're giving me a figure of 1.6. They're giving me a figure of 1.6 like that. And therefore, restated EPS, I will take this 1.6 times the reciprocal. 1.6 times reciprocal. Do they still remember the reciprocal, really? Do they still remember the reciprocal? Do they remember the reciprocal? The reciprocal, that thing. We had obtained this thing somewhere. It was a 5 over 4.5. Now it will be 4.5. 4.5 over what here? Over 5. Over 5. Over 5. Which will end up giving me 1 point what here? 1.44. Which will end up giving me 1.44. Which will end up giving me 1.44. Thank you so much. Now, please, I would want you to listen and listen to me very well. Listen and listen to me very well. If I'm the one doing this question, and then I realize that I'm confused somehow with this profit from the continuing operations and whatever, and maybe I feel that I should have taxed it, what I will do, I will come by the side here. I will come by the side here and make an assumption. I'll tell the examiner, assuming that this was profit before what? Tax. I'll tell the examiner, assuming that this was profit before tax, then this would have been the solution. This would have been the solution. And then you do it. Don't delete any answer. You leave both of them where? There. KASNEB examiners are always trained, in this case here, to pick what here? To pick the correct answer. The correct answer. But there is something I would want you to remember. There is something I would want you to remember. When getting basic EPS, 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 we consider total profit. We consider total profit, i.e. profit from continuing plus profit from discontinued. Plus profit from discontinued. Profit from discontinued operations. Whenever we are getting basic EPS, you know, this examiner only gave us profit from continuing. But you must have seen from most of the questions in your past paper, they give you both profits. They'll give you profit from continuing and profit from discontinued. So whenever you are getting basic EPS, you must always do what here? Add the two. Are we together there? Are we together there? Are we together there? Great. That's very important to me. Now, when getting dilutive, we consider profit from continuing only, from continuing operations only, because you see, dilutive is futuristic. Dilutive is futuristic. This discontinued operation will not be with us. Will not be with us. Will not be with us. Thank you so much. I can see Kendi already has this idea. That is very, 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 very good. That is very, very good. Now, ladies and gentlemen, if you'd allow me, then straight away, I will go straight away to this question, which is Roman 3, diluted earnings. So can I go to diluted earnings now? Can I go to diluted earnings? Move a bit. Can I go to diluted earnings? Can I go to diluted earnings? Great. Thank you so much. Thank you so much. Thank you so much. Thank you so much. So let me then grab this. Thank you so much. This is so important to me. This is so important to me. This is so important to me. So diluted. So now we are talking of diluted EPS. Diluted EPS. Remember, to dilute is to reduce. To dilute is to go down. Many farms, especially farms in Europe, farms in the US, if EPS goes down by more than 25%, a quarter, if EPS reduces by more than a quarter, the top management resigns, or they will be sacked, all of them. But of course, in Africa here, you would rather die than do what here? Resign. EPS. How do the same case. If the question has got a bonus and it has got the rights fraction, you'll take the restated EPS, you'll take whatever you have there for last year, you multiply with the reciprocals of both, reciprocal of the rights fraction and reciprocal of what your bonus, the same. Great. Now please listen and listen to me very well. So if there is anything that these guys normally guard is a reduction in EPS. So if they know, and this normally happens often, if they know that we have some instruments which in future may lead to swelling of ordinary shares, where ordinary shares can increase drastically, you see, how do we get EPS? How do we get EPS? We take profit after tax, and then we divide this by number of what your ordinary shares. If we have any financial instrument that we have issued outside there that can make this number of ordinary shares here, if, for example, they were 1 million, if they were 1 million, for example, they become 4 million. You see, if they become 4 million, they will decimate this. The EPS will drop down once. So if you don't want problems with authorities sacking you, you as a CEO, you must prepare your investors psychologically. Tell investors like this. You know what? We have these two things. We have given out what we call convertible debentures or preference shares, convertible debentures or preference shares, and we have given out there what we call the stock, what we call the stock options. So listen, stock options are those financial instruments we give to senior management, because we would want this senior management to stay with us for a long time. We don't want them to go, because they're the ones who are driving business. If it's, for example, the CEO of Safaricom, you can see these guys get up to 300 million a year as bonus, right? So give them, incentivize them. Tell them that should you guys stay with us for 5 years, then our current shares that are selling for 50, we shall sell to you those shares for 2 bob if you stay with us for 5 years. So basically, you have given them stock options. So should they remain with us for those 5 years, then they will buy our shares at a reduced price. Remember, option means it's not a must. You can choose to run away after the first year, but you lose your options. You lose your right. So when, ladies and gentlemen, please listen, when in this case here we have options, you must know if these managers are to exercise their stock options today, will the profit increase because of them exercising stock options? Will the profit of the firm increase if they exercise? Will the PAT change? Will the PAT change? Profit of the firm? No. Profit of the firm will remain intact. Profit of the firm will remain intact. What will change in this case here are the shares, because now they will take shares, ordinary shares. Ordinary shares of the firm will increase. So here, basically, you will be able to increase no's. You'll be able to increase number of ordinary shares, no change to PAT. PAT doesn't change. PAT doesn't change. Now, what of somebody who has a loan? We have issued them with a debenture. They have given us money. We are paying them interest every other day. If these guys here choose to convert their loan and take our ordinary shares, I can see something on my bottom line. I'm going to save interest. So in this case here, we shall save interest. If they convert, we save interest. And this is very interesting. This is very easy. So here we save interest. So then what shall we do? We shall add interest net of taxation to PAT. Because you know, when you are paying interest, you had a tax benefit. Now that they are converting that tax benefit, you are losing the tax benefit. So you add back the interest less taxation to PAT. If this guy is here, convert to PAT. And then, of course, in this case here, we shall increase the nose. Nose stands for what? A number of ordinary shares. And once I do this, then I would have given you tool number 3 and tool number 4. So first of all, I would want, ladies and gentlemen, to see whether you guys, whether we are together. Have you been able to write up to here? Have we been able to write up to here? Have we been able to write up to here? Thank you so much. Thank you so much. Thank you so much. So we've been able to write up to here. That's very good. That's very good. That's very good. That's very good. So then let's, ladies and gentlemen, try to handle this. This is the easiest question, really. I will always start with stock options in this question. When they tell me to calculate diluted EPS, I would always want, in this case here, to start with the stock options. So then, ladies and gentlemen, what do I have here really? Let me check here. What do we have here really? We have something very nice there. When it comes to this particular stock options, so I'm writing there, the first dilutive item are the stock options. So stock options, first of all, I will get the percentage of dilution. The percentage of dilution, this is the easiest. They told us up there, as at that date, R Limited also had in issue 2.5 million options. So in this case here, they had issued 2.5 options. And then what have they told us? These options are exercisable at 1.5, quite lower price. They're exercisable at 1.5 per share. And the average value per ordinary share during the year is 2. You can imagine the shares are going for 2, but you have told these chumps to buy each at 1.5. Are you seeing we're going to make a loss as a firm from the shares? Are you seeing some loss there? Are you seeing some loss there? Are you seeing some loss there? These guys are not seeing any loss there. They're not seeing any loss there, really. They're not seeing any loss there. 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 Great. So in this case here, the loss will be 2 minus 1.5. 2 minus 1.5 all over the original price. All over the original price. So the shares are going for 2 bob. The shares are going for 2 bob. The shares are going for 2 bob, but you're selling to them at 1.5. So in this case, you take 2, divide, or rather minus 1.5 divided by 2. This is what we shall call the percentage of what you dilute. Whatever you get, you can multiply with 100. What percentage are we getting, somebody? Yeah, what are we getting? What are we getting there, somebody? They are telling me that it is 25%. It is 25%. It is 25%. So it's like we have given them 25% of shares for free. This is the bonus issue. So it means that our nose will increase by. Our nose will increase by. We are taking these 2.5 million options times 25%. The party answer. Our nose will increase by these 2.5 million times what here? Times 25%. Times 25%. Times 25%. So Oronyo, I mean, gives me 625,000 shares. So you have to give them 625,000 shares for free. Is there somebody who has learned something here? Is there somebody who has learned something here? You know, if you look at the marking scheme, yeah, you are getting tick tick. You are getting tick tick. You are getting tick tick. As others are watching there, as others are watching what here, looking at the ceiling, making prayers for God to drop down manna, and they never worked hard. Great. Thank you very much. So this is it, but we haven't yet finished. So what I will do, I'll come and give them the increase. I'll just write here, increase in EPS. You just write there, increase in EPS. Increase in EPS. How do we get EPS? Remember, we normally take the PAT divided by what here? Nose. Out of these stock options, you are the guys who have told me that PAT will not increase. PAT is not increasing. PAT is 0 there. Divide this by 625,000 shares. So then at the end of the day, we are getting no increase in EPS. no increase from this bonus, no increase in EPS. This is very important to me. Just write it like that: 0, 0, 0, 0. Now from there, have they given me any other item that has got dilution, potential, dilutive financial instrument? Oh yes, they have told me in note number 3 that we have what here? We have in note number 3. How I wish I had a bigger board. In note number 3. In note number 3, they have told me that there is something that can easily be converted and it dilutes our EPS. They have told me in note number 3. On 1st July 2021, the company issued a shillings 5 million convertible bond with an effective interest rate of 12%. The bond is convertible into ordinary shares at the holder's option on the basis of 60 shares per shillings 100 bond. None of the bond was converted during the year. But now that we want to calculate the dilutiveness of these, so I'll come and mention their convertible bond. Convertible bond. Convertible bond. So the first thing is the interest saved. The interest saved. The interest saved. So is there somebody who is able to see that interest? Remember, the interest is 12%. The interest is 12%. 12%. So 12% of what here, somebody? 12% of what here, somebody? 12% of what here, somebody? 12% of the total amount. It's 5 million. 12% of 5 million. 12% of 5 million, right? 12% of 5 million, yes. So could you kindly take 12% of 5 million, give me an answer? 12% of 5 million, give me an answer. 600,000, right? 600,000. But remember, my part can only increase by interest net of taxation. Interest net of taxation. Interest net of taxation. So then this interest will be 600,000 times, remember our tax is given down there is 30%. Our tax given down there is 30%. So 1 minus 0.3, this gives me 0.7 like that. So then in this case here, convertible bond will save me. So this is 420,000, and these are the savings should these guys choose to convert. Should these guys choose to convert, we shall save this. If you look at your marking schemes, which I normally give you, isn't the marks zinatembea? Hata kama ni 0.5, the marks zinatembea. The marks, when unaposema tu diluted EPS, you start reasoning like this, right? And then I'll come and give me the increase in number of ordinary shares. Increase in number of ordinary shares. Is there anybody who is able to see the increase in number of ordinary shares? Really, these guys don't want to talk to me for some reasons not known. They don't want to talk to me at all. Is there somebody who is able to see that fraction? Is there somebody who is able to see that fraction? How are they converting here? They're converting here 60 shares for every 100 bond. 60 shares for every 100 bond, right? And the total bond value is 5 million. The total bond value is 5 million. Gideon, I can't see where you got your 40 from. The most important thing is that you are able to follow. If you follow, that will be good for me. If you follow, that will be good for me. If you follow, that will be very good for me. So 3 million. 3 million. They're giving me a figure of 3 million. So up to there, are we together really? Are we together? So if they choose to convert, they are converting the entire 5 million. So then, ladies and gentlemen, please, thank you so much. Please, kinda, yes. So come here and give me the increase in EPS. Increase in EPS. Increase in EPS. So increase in EPS will be the profit that you're going to save, the increase in profit, which will be 420,000 divided by 3 million. Divided by 3 million. So this will give me 0 point something. This will give me 0 point something. 0.14, like that. So between, why am I getting this increase, potential increase in EPS? I'm trying to see between, yes. I'm trying to see between these two. Between these two. Which one is the most dilutive? Between options and the convertible bonds. Which one is the most dilutive? Which one is the most dilutive? Which one should we rank number one? Which one should we rank number one? Which one should we rank number one? The most dilutive. Yes, the one with the lowest this increase. The one with the lowest. So this is what you rank as your number what here? Your number one. This one here. This becomes number what here? The one with the lowest increase in EPS is the one that you rank number one. That is the one that is most dilutive. It's not giving you any profit, and yet the shares are increasing. The shares are increasing. The one that has the lowest increase in EPS is the one you rank number one. Now, free marks, ladies and gentlemen. So come here. Come here. Please listen. Please listen. Come here. Please listen. Please listen. Please listen. Please listen. So now come. But I remember. Come here. Come here. Come here. Come here. We start with our basic EPS. Basic EPS. Is there somebody who can remind us what our basic EPS was? Is there somebody who can remind us what our basic EPS was? These guys don't want to talk to me. The basic EPS, if I can remember very well, the basic EPS, if I can remember very well, it was 13,875. It was 13,875 divided by the one knows that we had obtained here as 11,100. 100. So in this case here, diluted with the number one ranked. So we mentioned here diluted with options. Diluted with options first. Diluted with options first, because it was ranked number one. So if we dilute this with options, then the diluted EPS, how will it look like? The diluted EPS will be 13,875. Remember, these options were coming to us with zero profit. Zero profit. So the profit here was not increasing at all. So plus zero. All over number of shares, the basic one must always remain plus, ladies and gentlemen, these options gave us some new shares. Is there anybody who can remember how many options, how many shares it gave us? New shares it gave us. Is there somebody who can remember how many shares it gave us? These options, 625,000. But I've cut my zeros here. I know you guys will be able to follow. I know you guys will be able to follow. I know you guys will be able to follow. So plus 0 plus 625,000. Ebu enda pole pole, mimi sina haraka. So tutasema 13,875,000 all over. Can somebody give me this denominator? Can somebody give me this denominator? Can somebody give me this denominator? What do we have here for this denominator? What do we have here for this denominator? Can somebody give me this denominator? Can somebody give me this denominator, please? Can somebody give me this denominator? 25,000. So could you kindly give me this diluted EPS with options? Give me the final answer now here. Give me the final answer here. Give me the final answer here. 1.18. 1.18. So that is number one has been brought on board. Now from there you come and bring on board the second one. So you come and mention here. 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 Now we are on there. So you mention there as a title, diluted EPS with options and convertible bonds. With options and convertible bonds. Diluted EPS with options and convertible bonds. You simply go back to this. You see this thing you have here? Because it's a blockchain you're building. It's a blockchain. So then what you will come and tell us here is that the depths will be equal to this one here. This one here. So we have here 13,875,000 plus 0 plus. When now I bring the convertible bond, are you able to remember something was increasing in the profit up? Is there anybody who is able to remember something was increasing? Is there somebody who is able to remember that something was increasing? These guys are not with me. These guys are not with me. 420,000 the savings. So plus 420,000 plus 420,000 all over. Now you go down to the base. You go down to the base. You go down to the base. So down to the base, ladies and gentlemen, then what do we have here? What do we have, ladies and gentlemen, here? We basically copying from here. So you're saying it is 1110. It is 1110. Whatever. Was it 11,100,000? 11,100,000 plus this number of shares, 625,000 plus in this case here, when we go for the convertible bonds, I can remember my nose was increasing. I can remember my nose was increasing. The nose was to increase by how many shares? How many shares? 3 million. Thank you very much. 3 million. Thank you very much. 3 million. Thank you very much. So then could you kindly look for this answer slowly? Just give me the numerator slowly. Just give me the numerator slowly. Give me the numerator slowly. Give me the numerator. This and this, I think the numerator will remain the same. 13,875,000. But the denominator will change. The denominator will change. The denominator will change. So according to this gentleman, it is 14,725. 14,725,000. So then come and give me the final answer here. Give me the final answer here. Give me the final answer here. So it will be 1.43. 1.43. Is it? Omekata. Omekata. Oh, numerator will change. Numerator will change. It will change because of this for 20,000. I'm rushing for nothing. It will change because of that for 20,000. Thank you so much. So then kindly give me the numerator. Please give me the numerator, please. 14,295. 14,295,000. It will change. How can I say it? Not change, and I can see that plus there. How about the denominator? Is the denominator going to remain like this? Is the denominator going to remain like this? 14,7, 114, 114, I don't know, 725. Thank you very much. Then could you kindly give me, in this case here, these depths? Could you kindly give me these depths? The depths, according to Rosemary, according to Francisca, we are getting 0.97, 0.97, 0.97. Now from there, we don't have any other dilutive instrument. So then what you will need to do is to look at your depths. So the smallest depths is what we call our diluted earnings, the smallest. So you come and write there, conclusion. So conclusion, the smallest depths. You don't have to write this in full, just write it like that. An examiner who does not know the meaning of the word depths is a crazy examiner. He shouldn't even be examining this level. So the smallest depths is 0.97, and therefore the optimal, the reported, or the depths to report, on financial statements, is 0.97. It is 0.97. It is 0.9. So that come that time, then, ladies and gentlemen, we should be able to do what here? We should be able to advise these people. I've been asked a very important question, which makes me be like a fool. A very important question there. But it's good to be foolish. It's good to be foolish. Imagine we never, ever thought of the time when we issued, especially, how could we forget this? Fortunately, I'm not the only one to take the blame. We are so many of us. You see, note number 3, at least for options, they were there from the beginning of the year. Options were there from the beginning of the year. They told us, as at that date, if you read paragraph number 2, as at that date, AFR Limited also had in issue 2.5 million stock options as at that date. That is very good. But you see, for convertible bond, this convertible bond was issued on 1st July 2021. 1st July 2021. So to the end of the year, could you kindly count for me the number of months? Count the number of months. The end of, I don't know how I forgot that. We have to time a portion. Number of months. Really, I cannot trust your figure. They're saying 6. 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 Count. Remember, what is the duration for your end month, end year? Don't imagine that it is it is December. The ones giving me 6 months, they imagine it is December. It is September, end of September, isn't it? So count up to end of September from this date. So from this date, if you count nicely, we have the whole of July, August, September end, 3. So, ladies and gentlemen, not much will change. Not much will change. Not much will change. I would want you to do me a favor where we had written that increase, where we had written that increase in EPS. Do you remember the increase in EPS? Not much will change. Increase in EPS. Increase in EPS, we had what figures? For the debentures, it was 420,000 over 3 million. Over 3 million. So here I would want you to do apportionment, and this will not change at all, actually. This will not change at all, because these earnings, you apportion them with 3 over 12. The same case with this. You apportion this with 3 over 12. So this and this will cancel. You'll end up getting the same figure you got. You'll end up getting the same figure we got. The same figure we got. Are we getting the same figure? So this will not be affected, actually. Here I'll not lose a mark. This will not be affected at all. This will not be affected at all. But now here now the figure will change, because you are coming to multiply this with 3 over 12 and this 3 million alone with 3 over 12. 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 So then could you kindly come and give me the numerator? Give me the numerator alone. Give me the numerator alone. Remember, this 3 over 12 is only affecting this. It's not affecting this and this. Tell you the truth, even for options and the convertible bonds and whatever, I normally bring the number of months later, although I'd forgotten until this lady reminded me, but I normally bring that counting. I normally count for stock options and convertible, whatever. The time apportionment normally comes at the end. Actually, after I've even written all this, then I'll come and bring the time apportionment. Mary is telling me that the answer is the same. I don't know. Are you sure? It cannot be the same. It cannot be the same. So give me the numerator. The numerator is 13,980. This is 13,980. How about this one here, denominator? For the depths, I believe depths, we should be able to get different answers. I believe depths, we should be able to get different answers. So for the denominator, what do we have here for the denominator? For the denominator, what do we have here? Gideon B, 1386, 100. 1386, 100. 1386, 1, denominator. Denominator, what do we have for the denominator? Now they're giving me different answers. These guys are tired. These guys are tired. They're giving me different answers. Candice disagreeing. Candice disagreeing, which is very much in order. Denominator is 12,475. Denominator is 12,475. 12,475. They're saying denominator is 12,475. 12,475. So then could you kindly give me the final answer? What are we getting for the final answer? Before Candy tells us why she's disagreeing, which is in order, good to disagree. 1.12. 1.12. Thank you so much. So Candy, what are your thoughts here? Candy, what are your thoughts here? Candy, what are your thoughts here? Please ensure that you are voicing your ideas. You can even unmute yourself, although I don't know whether I'll be able to hear because there's a lot of noise outside here, or type.
Okay, I think you can hear me. When we are calculating that particular apportion, I remember it's supposed to be 12% of the 5 million. The 12% of the 12% of the 5 million, and then times the 0.7, we consider that particular tax, and then times the number of months, 3 out of 12. We are getting 105. That particular interest, my figure, it's 105,000. And then when I'm coming to the shares, so remember it was 100 for 60. What about now the 500? So the number that I got, the 3 million, I'm supposed to multiply it, to apportion it to the 3 over 12. So I got 105. So my figure on my numerator, I'm supposed to put 105, and then my denominator, I'm supposed to add with the 750.
So according to this lady, what is she talking about? So we have in this case here interest. Interest is 12% of the 5 million. All right?
Yes. Yeah.
5 million. In this case here, times what here? Do you want
Times
us to subtract tax now, or we subtract tax later? We subtract tax now, isn't it?
Yes, yes.
Okay, so this one here is giving you what figure?
So that one, it's giving me 105,000. 105,000, sorry. Another zero, 105,000.
105,000, eh?
Yes,
okay,
yes.
Great. That is the interest saved, isn't it?
Yeah, that is the interest saved. Yes.
And then now we have a number of shares increase, isn't it?
Yes,
It
yes.
will be 60 divided by what year?
It's supposed
100,
to be. So,
isn't it?
yes, yes.
60 over 100 out of the total, isn't it?
So times that was the 500. That was 500. Yes.
Is it 500,000 or 5 million?
It's 500. 500.
500. Why?
No, it's 5 million. Yeah, 5 million.
5 million. Yes.
Yeah, 5 million. So that is where now I'm getting 3 million, right?
You're getting 3 million. Yes.
Yes.
Times 3 over 12.
Yeah. Now times 3 over 12.
Okay.
Now, when I do with times 3 over 12, now I'll have 750.
Now you have 750.
50,000.
Okay.
Yes. So that is now the figure that now I'm supposed to take to my debts. Right?
Yes. Yes.
Exactly. Yeah. So when I'm adding now this particular 13,875,000 plus 0, now I need to add 105,000, the 105,000. And then when I come to my denominator, I do the same.
Now I've gotten you. So we come back here very fast. So the increase in EPS, in EPS will be equal to the earnings saved here, which are 105,000, isn't it? Divided by what here? The new shares. New shares which are how many? 750.
Yes.
750,000. So this one here gave you what figure?
I mean, it's giving me 0.14.
0.14, isn't it? Now,
yes.
Using the method that we are done here, we got this one here. We are not really debating about this. Okay, using the method we used, we took 12% of 5 million times 0.7. What figure did we get here ourselves?
That was 420.
This is what is wrong. This is what is wrong. So what figure do we get here? Somebody. What they are telling me is wrong. What they are telling me is wrong is here. We got here 600.
We got 420. Yes.
420,000, isn't it? How about this one here, which you're saying is wrong? The shares.
We got 3 million.
3 million.
3 million.
3 million.
Yes.
And you are saying if we use this approach, it cannot give us this.
I get it now.
Because if we take 420, because I think this is quite a basic math. Let's see. 420,000 divided by 3 million.
We get the same answer.
And you see the 3 over 12 is coming here. The 3 over 12 is coming on both sides. On both sides. So times 3 over 12 times 3 over 12. Let's see whether we'll get the same answers.
Yeah, it's giving us the same.
It will give us the same. That's why at this initial stages, whenever I have stock options and the debentures, I don't even count months for them. I'll only count months for them when I come to this last the last formula. The last formula like that.
How?
No problem. We are giving you many options, and then you will be able to do what to choose what works for you. Now, ladies and gentlemen, thanks very much, Kendi. So now that I know there must be somebody who really wants us to be perfect on this law. I would want us to fetch this 7 out of 12 marks. And now this is what I guide you to do. I would want all of us in 20 minutes to try this question of November 2019, question number 5A. 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 And how are we trying this question? How are we trying this question? With the attitude that I don't have to get all the marks. With the attitude that I should be able, to do what here to harvest these low-hanging fruits. So we are doing this question in 20 minutes. And then we post our answers on WhatsApp so that we can get to see really how many. Like now this one, yes, they simply want us to give them basic earnings, yes, for 2018 and the basic earnings for 2019. And then of course there will be a theory up there. I'll be able to show you the theories that normally come in this section. So let's see how many you'll be able to harvest, and then we compare notes in 20 minutes. Now listen and listen to me very well. The question here is November 2019. November 2019, question number 1, question number 5A. November 2019, question number 5A. November 2019, question number 5A. And then I have a suggestion.